Okay.
Yeah.
Okay, great. All right. All right. Well, welcome everybody to the Pro Trader webinar series for today, Wednesday, the 24th of April. We have Options Millionaire, and he'll be going through his order flow strategies and trade management. The theme this whole week is trade management. And because we've done so many of these webinars in the past and going through setups and strategies, etc. But one of the things that has been lacking was trade management. Really, some of the nuances in the trade management that can make all the difference. It can take your strategy that you might have a tremendous edge, but if you don't manage it well, you're not going to make much money out of it. In fact, you can even lose out of it. So let's go through the bio with Options Millionaire if you're new in here.
There we go.
Okay. Yeah. So Andrew's been trading for quite a while, over 12 years, and very passionate about it, and also loves helping people. The passionate is infectious. You'll see as we go in through the webinar today, and the amount of knowledge and depth here as well. You will also understand why Options Millionaire is so popular and followed on YouTube and other social media platforms. Anyway, he started off with volume price analysis and then has gotten into the order flow and supply and demand, and believes that that is the best indicator. Well, is the market itself and the price action. Let's go through the disclosures, and then we'll just turn it right over to Andrew, Options Millionaire. Okay, general disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. So thank you so much, Andrew. Very happy to have you here. Take it away.
Thanks, Bruce. I appreciate the introduction, and definitely happy to be here. So, yeah, I'm very very passionate about the trading profession in general, whether or not I consider myself a professional or not. But it's something I take great pride in because it's something I've put a lot of blood, sweat, and tears into, and I'm happy to be a part of the community, definitely. So yeah, so basically what we're going to go over here is how I apply the bookmap theory, how I use order flow and other auction theory to figure out how I'm going to trade, how I'm going to put on trades, executions, and exits, and etc. And we're going to kind of go over that now. Screen share just stopped. Let's see, share screen. How about now? Is it good? All right, so I think
Yeah,
we're
good.
there. Okay, there we go here. So yeah, so what I'm looking for here is activity. It all boils down to the very basic of trading, which is liquidity in the market, participation. I think it's everyone's goal to figure out where big money, however you apply the concept of big money, institutions, dealers, hedge funds, et cetera, where they're putting on liquidity and activity in the market, and that's my goal. Figure out where the big players are participating and ride their coattails. I'm a far stretch from a big player, and I want to be able to be on the right side of the trade, and that's what I use Bookmap for. So for me, I'm looking for the basics. So the first time I sign in for the day, first time I start doing an emphasis or analysis on the market, I'm looking for the big liquidity levels in the market. It's the first thing I do. And I zoom out, I go all the way far out. I trade Bookmap a little bit differently than other people because in the way I'm trying to look at the macro perspective and then zoom all the way into a micro environment. So the macro environment is I'm zooming all the way out and I'm going to see is there anything high level, 5250, maybe even down to 4900, etc. Which I know this 4960, by the way, has been on there for a couple of days now. And then from there, I do a big to small analysis, zooming in and figuring out where is the short dated or the short time frame stuff that could be fulfilled in the next 15 to 20 minutes, which right now we have obviously a big level of 5135 and 5110. And then I do the same thing across the board on NASDAQ, on CL, any other names that I trade, which is these right now, these are the main three futures names that I trade. And I'm looking to add Dow and Russell more stuff into my cross check as well. And then once I take these liquidity levels, I'm going to basically take those and put those onto my chart to see do those levels make sense. Is the reason why there's 51.35 from a volume price analysis standpoint on my chart, and does it make sense to provide a good amount of resistance or support at those particular chart, and is it supported by prior historical activity? I guess prior historical is redundant, but you get what I'm saying. And right now, 51.35 would put us at about a top support or top resistance here on the market. We've got a whole bunch of resistance that's topping out at approximately 51.30 on ES, and 51.30 puts us right in that area where if they were to sweep upside liquidity for dealers to begin to take some profit, that could be a particular area, because obviously we'd be looking for a little bit of selling action here up into 51.35. So I know with 634 plus on 51.35 that to me, like a moth to a light, that I'm going to look for activity push into 51.35, because the market loves liquidity, the market loves participation, and it seeks out that liquidity. And for one reason or another, that's there, and I'm going to look for the bid that up here, and then of course we'll have that little sweep movement. And then how we interact at 51.35 will be how I make my determination on the trade itself. Right now, the S&P is putting on a little bit of a consolidation this morning, although wide range consolidation from 51.24 down to 51.09, so approximately 15 to 20 points of range. And we've been in a slow grind up since 10:30 yesterday morning. We had the big pop, and then the volatility kind of left, and we've been in the slow, grindy action here going on about 24 hours. We also have a couple of shifts in the winds here across the Treasury market, mainly as we're going into the earnings and, of course, blackout phase for next week of FOMC, which we can anticipate a lot of volatility. So my goal this week is not necessarily to figure out what's happening today. It's trying to, how does it fit into the puzzle of between now and FOMC? We already had a VIX spike to 21. Now they've obviously rolled off VIX so they could take profits on those and write premium to collect that big juicy premium we had on the books last week, which causes a tailwind effect in the market. So with the VIX already rolled off from 21 down into the consolidation range, with this liquidity already back up to a retest of the 51.20 to 51.30 pivot, how does that play into my thesis of where they're shifting liquidity on the order flow? If you notice yesterday, they were stair-stepping liquidity up into the 5100, which was the main resistance going into from 5100 to 5120, and now they're pivoting it up to 5135. Now, outside of this 5135, how does that look for upside? Right now, we've got a little bit up to 5187. I don't see any other real big players up above this area, which someone may ask, why does that matter? Well, it always matters to me because I want to look for overarching liquidity that's being placed on the books, because it could tip you off to a big move. Kind of like if you remember back in October, there was a big player putting on liquidity at 48.50 when we were down at 4,000, and eventually it did fill. For me, right now, the skew is still south, and that's my overall macro picture, because we have a big player sitting at 49.60, 1961, and another 600 down at 49.50. So in this 10 order block, we've got a lot. Now it's a little bit smaller than it was Monday, but it's still on there. And if you go back to April 2nd, on a Monday, which was a Monday, April 2nd put on roughly 3,000 orders, or a quantity of 3,000 that was just below the price action. And then Monday into Tuesday, we went green, way up high, and then Wednesday we went and smoked it and came down and filled aggressively sell. So these large liquidity blocks cannot be ignored. There's a reason why it's there. The market seeks out liquidity. So I'd keep an eye on this 49.60 order block on the next 24 to 48 hours, maybe even going into Friday, of this order block being filled. It tends to happen when it's that aggressive and it's that close. If it's super far away, like maybe if that was down into like the 4,200 range, I wouldn't necessarily pay attention to it on the short term. But the fact that it's right against us relatively, I would look for this in the next 24 to 48 hours, possibly even Monday, but right there. Overarching now, the book was heavily with liquidity yesterday. Today, not so much. We have a little bit of 51.10, but overarching is 51.35 right here. And my goal here is to figure out how we go into the end of the week. We have Meta today, which is the last big player not to have any kind of pressure. Meta's pretty much been hanging out since February after their large sweep upward with their earnings. So really all eyes on Meta today, as Meta is the last one standing. Even Nvidia, who's been the golden child since October, Nvidia had a smoke show on Friday. They were down almost over 10% at one point. Meta has not yet felt such pressure. They've had some red days, sure, but they have pretty much been flagging up at new all-time highs since February. And we'll be seeing what Meta wants to do after today's earnings reports after the bell, which will be interesting. Obviously, Meta or Nasdaq will shake big time from them, and then from a back-end analysis, I want to track how the order flow rotates from big caps to small caps, or from small caps into big caps with the data. So I would keep an eye on the Russell to figure out how they're going to rotate in and out of large names with the data that is either good or bad with Meta, especially hanging out at all-time highs. I personally don't like to track earnings in terms of bullish or bearish or good or bad because I think that's nonsense. For me, it's all about tracking liquidity and how they're positioned for the move. Case in point was Tesla today. Tesla's gotten beat down this year. They're down 45%, I believe. Tesla was at multi-year highs for short interest, and of course, a little bit of pressure applied. I guess you could say, quote unquote, they were priced in the bad news, and Tesla flies up over 14% at one point because they're closing out positions, trapping all those shorts, and then short squeezing that short interest back high. So in the same note, we don't have a lot of liquidity news for Meta. Meta's pretty much been low volume back and forth, even respective to their move, and there's not a lot going off of it. They're just kind of flagging at all-time highs for going on 3 months now, with no real big move. So I'll be very curious to see how they do, and of course how the indices rotate in and out with them. But as we stand here, we're kind of checking the boxes here of too much too fast. If you remember what happened Friday, we had an aggressive sell-off that caused dealers to trip the breakers under 5,000 strike on SPX and sell off, which was immediately bought back up and sold off again. And that kind of that fulfilled nearly my thesis of downside, not quite, but almost there, of the too much too fast into support. And this is Nasdaq being up 700 points in a day and a half here, with virtually no selling, is coming into resistance in a way that's a little bit too much too fast. So I could expect some sort of retracement today. Definitely not a sell-off. I don't think they're going to go too far from here going into FOMC. But a little bit of profit taking, a little bit of reprieve here from the buying today and into tomorrow, or at least maybe even to tonight's Meta. So keep an eye on it. We're seeing a little bit of rejection off of the 5120 area on ES and the 17,700 area here on Nasdaq. But if you look at Nasdaq, they have a very light book right now. They're coming off 17,720 down to the 660 as they removed that 780 or the 800. So you see they put that on multiple times and try to attack it, unable to actually do so. In fact, the highest they got was 796 before a rejection. And now they've completely removed liquidity with the skew now down to the 650 with an overall negative CVD. So what I'm tracking here on ES is, one, we do have a couple of small icebergs on here. Now these are quite small. I don't pay too close attention to these, but the fact that we have a number of icebergs starting to come on, you just saw a third one right there, I'm going to closely watch these to see if they pump. What I like to see is if I see a bunch of sell-side icebergs that start pumping 57, possibly up to 500, and if they start going into the thousands, like 1,000, 1,500, 2,000, that's when I know there's probably a good chance a move is about to be made out of this consolidation range to break into one direction. If these are sell-side, I'll look for a break lower to retest the 17,660 on Nasdaq and ES down into the 5,100 area retest. But I need to see a little bit more robust action on the icebergs right here. In addition to that, the CVD. In my opinion, the benefit of CVD is not necessarily the widget itself, it's the subchart indicator. I think the subchart indicator is a fantastic resource to watch where the overall sellers or buyers are entering or leaving the market. And in this case, we definitely see a green CVD, which you could look at the CVD and say, hey, the CVD is green, why are we falling? But then you've got to double check the subchart because we had a CVD that was much more green. And if it continues to roll over, I know that, yes, it is green overall, but the sellers are beginning to reduce this down, possibly even negative or positive, or neutral, and then flip it into negative territory, which would show a gross aggregate of sellers. And that's overall I'm splitting here now. We are kind of pinned back and forth, 5123. We're coming up on 1030, which will be the finishing of my morning range analysis, which is where I set, I take the first hour of the day and I set the high price and the low price and I trade off of those levels, and they are strong algorithmic pivots. So when the market comes on and sets that first high and first low, those are levels I want to exploit, because for some reason or other, when the market opens, they have got their sell orders and buy orders programmed to sell at these levels and buy at those levels, and I want to know where those are. And as we all know, the first hour and the last hour are usually the highest participation time frames of the day. And that's pretty much what we're setting now. If you look, we're setting that up nicely, especially like right here on the YouTube. We've got the morning high and low approximately right here, and that's where I'm going to pivot. And I do this on SPY, ES, NASDAQ, and you can exploit these levels. You see, like right now, they're working pretty well, and they really start to help you going into the next hour of the day, where you can start to begin, are we in a trend up, trend down, or a range day, and play the highs and lows. And if I can tie in where the liquidity is with these levels, I can really exploit that, because I can anticipate now, for example, we have come on down and attacked this 5110, which is an overall light level, and we're glued to it. Whether or not we're going to blow down and put in a new low, which is looking kind of likely here, to fill this 110 and try to come on grabbing down 5106, 5107 before another bounce. Apple's quite strong this morning. Nvidia has come off a lot after being very green. Microsoft is flat at the moment, and let's see, just looking across the market, bonds are getting smoked again, and that's the change in the sales, the wind in the sails this week, is TLT has dropped all the way down and is attacking their prior pivot of 88, which is in danger of giving out. And if that were to give out, if we're coming on the second test, and if the bonds market in general, mainly TLT in this instance, fails to support this, then we could see another reattack of the 52-week lows. Either way, if you've been following me, and if you know that I think the long bond play is going to be a fantastic play for the rotation coming up in the next 12 to 18 months, which is going to be a longer term play. I'm more of a fan of buying TLT itself than I would be options, but I think the time is coming. Let's see. Second, let me check on something. New red, and as we're glued to this 5110, I'd expect them to, it looks like they're going to sweep this 5110, which would make us attack. I would probably say 5107. There's not a lot of momentum or big structure lower here. In fact, they've taken some off, so I'm not looking for a huge drop here, but I do expect them to wipe out this 5110 area here in a couple of moments. Refresh. Got some questions here on YouTube. I need to master this for my family. What's up, Richard? Let's do it, baby. Let's do it. 49.60 in the last week's low. By the way, missed your stream the last few days. Well, thanks for being here, Iron Wills. It's all right. What's up, Invest in Muscle? Do you set with wicks or bodies on only? I use the wicks as well. So it's the highest and lowest overall price, and that includes the wicks. You have to remember, you know, we get so caught up in the visual nature of candles and wicks and bodies, but you have to think about ticker tape. You have to think about the price. The wicks are traded price action, so they have to be included in your analysis if you're looking for it. Just because they didn't close there or open there doesn't mean they're not relevant. So we're still again pressing in this 5110. We are been here for about 7 minutes now, just kind of pressing into this low here. The buy volume itself is a little sus in long-term time frame. Sell volume still remains long-term king. Any thoughts? You talking about for TLT? Kennedy? Let me know. In terms of TLT, if that is what you're talking about, the sell volume is greatly more robust than the buy volume, for sure. Especially starting back on April 10th. I mean, the sellers have been actually hammering the buyers, and that's because of the shift in the theme with rate cuts. Right now, all eyes are on the next cycle, which is transitioning from a rate pausing into a rate cut cycle with the bonds, and the demand for the bonds is simply not there because we're still in an environment of increasing yields. Maybe not increasing, maybe they're just paused, but either way, they're not going to get a lot of demand on the bonds until we start getting that rotation. And that's why TLT is getting blasted. And they could, if they don't hold this 88, then we're going to start retesting that 82 area on TLT itself. But you are right, the long-term thesis, the selling action is definitely more robust than the buying. Amazon's coming off a lot. They're down 0.1. Google's down 0.16. LLY is down almost 2%. Let's take a look at the X's. XLF is still flagging 41 after being down. Silly noob question. Nope, not silly at all. What is an iceberg? Icebergs are hidden orders on the book. And it's for one reason or another, there's a player who's going to program his orders not to show up in full on the order flow. And it's our job to monitor those and anticipate those as participation. Now, to me, something like 259, not that big of a deal, but I want to be able to monitor those for when the time comes that we have a very large block of icebergs or a number of icebergs that are pinpointed around a particular price, because usually that tells us that we are getting ready to leave a particular range, which is that's very valuable to me. And it does require patience as well. You're welcome, Kennedy. But I use those in conjunction with the stops, which are the red dots. Now the stops themselves, I don't necessarily pay attention to those unless they are quite robust themselves, 2,000, 3,000. Remember, I'm not sitting here trying to scalp every little order. I'm not worried about the 2 or 3 point moves. I'm trying to get the 20 to 30 point moves on ES and 50 to 100 point moves on NASDAQ. So the bigger the participation on the book, the more aggressive I'm going to play. If I do want to scalp a little bit, then I'll play level to level with some small positions, 1 or 2 contracts of futures, stuff like that. But I really start to sit up in my chair when I see a bunch of participation on the book. Big participation here on the book means big participation in the overall market, which translates to more volatility and more profit potential. Now, on the flip side of the coin, obviously, we have more risk potential, which means you have to have proper system management in place, which is also something I use because if I can anticipate a certain degree of liquidity being grabbed or adjusted for on the book, then I want to set my stops beyond that liquidity zone. Because if you set your stops within the liquidity zone, you're just going to find yourself getting stopped out repeatedly, especially on smaller scale trades such as scalps. So I want to set my stop beyond liquidity zones in order to be able to sustain a trade in the event that they try to sweep. Can you see these icebergs on IBKR level 2 order book? I've never tried, honestly. I personally don't use IBKR or any other brokerage's order book. I use this Bookmap for that. Good question though. NASDAQ is still holding 741, 750. All right. What do I think about Tesla with the earnings miss? Market mechanics, baby. Market mechanics. I don't even pay attention. I don't even know what they reported. I don't even pay attention to earnings reports in terms of Mr. Hit because it doesn't matter. People get so caught up in the bullish or bearishness of the data, it doesn't matter. It's all about what the order book is doing. And Tesla has been beaten down for weeks, and in fact months. And with that kind of short interest, you don't want to bet with the direction of the short interest when it gets to that level after such a beatdown, because all it takes is a little bit of pressure and you get smoked. You enter into that domino effect of short squeeze. Is today the Bookmap webinar you're participating in? Yes, it is right now. We are on the Bookmap webinar. Welcome.
Hey, Andrew, would it be possible to go through maybe a scenario of a trade management? Like if you were in a trade, how would you um, go through the process of managing it?
Yeah, absolutely. So right now, for example, I'm monitoring these two levels right now, 5135 and 5110. And the upside liquidity is definitely more robust. So I'm thinking here we continue to attack this 5110. So in the event right here that we start to get, let's say theoretically, I'm not necessarily seeing this setup, but let's say theoretically we begin to drop here and we want to attack down to 5106. In my mind, if I did elect to put on a short to try to come on and reattack 5100, for example, which is only about 14 points. If I want to do that, I have to be aware of the fact that we have 5135 skew up here with a very robust amount of orders. So I know there might be some potential or appetite for this market to transition back up into another high to place 5135 for our last liquidity sweep. So in my mind, using this knowledge, I am not going to let a short go too far into negative territory here, because whereas on the flip side, if I'm in an environment where I'm shorting and there's a whole bunch of skew down here where there's a ladder of liquidity for one reason or another, there's open managed liquidity that's beginning to adjust, maybe some icebergs, I'm going to be more likely to hold on to a short a little bit longer if I saw any temporary green candles against my short. But in this instance, for example, I would not elect to hold a short in terms of a short-term scalp for any more than, I don't know, 3 to 5 point loss. I'd say 5 to 6 point loss more likely in the event that we did get any bounce, because I'm watching this liquidity. I don't want to allow them to attack this liquidity and have a 15-point drawdown against my particular ES short. And then conversely on the upside here too. So now if we want to get out into a bullish thesis here, is that if I do have a VPA confirmed bounce, which is a bottom wick that confirms into support, then I would like to long to try to grab that 5135 with a trailing stop all the way against it. And that's kind of what I'm using right here. And it does help that this liquidity is still holding right at the morning low pivot, because that's a great example for me to go long. So that's the way I want to look at it here, is once I have my confirmation bounce off the 5110, if I wanted to go long, I would place the order and I'll trail stop it up into, hopefully beyond the 5123 into this 35 liquidity. I just don't know when that's going to be filled. But the trick is not to time when it's going to be filled. The trick is to leave yourself in the trade long enough to give you the opportunity to fill that 5135, and you do so through proper risk management and stop loss, trailing stops.
What are some of the details on your trailing stop?
For me, it's all about time frame. So I boil it all down to risk versus reward, my R&R, which I'm sure a lot of people have heard that before. If I am in a long-term trade, whether it be long-term as in weeks or months, I narrow it down to what am I going for. If I want if I want a long here and try to grab 15 points, then with my R&R, I can't have a stop loss that's beyond 5 or 6 points, just because I try to go for a 2-to-1 R&R. If I'm going for 15 points, I can't go for more than 5 or 6 point of a stop loss. If I'm going for 50 points, I can't leave on more than about 20 points or so of a stop loss. And yeah, I know it wouldn't be very fun to have a drawdown on like a 20-point ES, but if you are going to put on long-term trades, you cannot have a stop so tight that the general fluctuation of the market is going to stop you out. You have to have a true breakdown of thesis in order to stop you out, and that's part of getting away from trading on your P&L, instead trading on a thesis or a strategy. Because if you're worried about the monetary drawdown of, let's say, 20 points, you're going to be very emotional when managing the trade. Instead of thinking, I'm going to leave this trade on until it breaks this. If I'm long, I'm going to stay in the trade no matter what until it breaks the support structure and gets me out of the trade. So that's the way I try to define my trailing stops, or my stop loss. And then once I'm in profit, it's really, I want to set my stops within a tolerance of the current market mechanics, the current market structure. So my overall thought process when I'm in a trade is I do not want to be swept. I do not want the market to sweep out my position just so 5 minutes later it goes in my direction and I would have made a ton of money. So when I am in a position, let's say long, by the way, they just removed that skew, so you could see that managed liquidity, they've taken off all that order flow at 51.35, almost in half. So when I'm in a trade, whether long or short, I'm going to be watching the candles from the 5-minute, 15-minute, 30-minute, depending on if I'm in a scalp, it's probably going to be no longer than the 30, 60-minute. And I'm going to be watching. If they were to move this candle disadvantageously against my position, where are they going to pivot that market? Because the earlier I'm in a trade, the more aggressive I'm going to be with holding. And if I could set my trailing stop beyond the prior major pivots, then I have a good chance of staying in that trade, regardless of how hard they shake it, in order to get me in a profitable position. So I'm constantly watching where the market is pivoting, depending on the time frame of whatever trade I'm in. Like right now, for example, I'm tracking the 5-minute chart. I know if ES gives out 51.12 because they just pivoted that market there at 51.12.50. So if I were in a long, which I'm not, but if I were in a long, I want to set my stop loss beyond 51.12 at least. And if you want to be even more aggressive, I would set it beyond the 51.10 liquidity, because if they were to sweep 51.10, you're most likely to get some sort of bottom wick. Now, I don't know if it's going to bottom wick and come all the way back up, or just bottom wick a little bit and then continue after your absorption and fall. But either way, you got to leave yourself a chance of probable success. Not likely, just probable. So I would want to set my stop beyond the liquidity structure of the market. And the way I think about it is I want to put on a position that has natural defense in the market. Not squiggly lines, not EMAs or SMAs, not patterns, not anything else. I want to set my stop losses where there's natural buyer's defense in the market. So if I'm long, I want to be able to set my stop losses beyond natural support. If I'm short, I want to set my stop losses beyond natural resistance in the market. So if they do go against me, the market will pivot against it for me. And that's the way the liquidity and Bookmap works, and of course the VPA signals I use in the chart work. I don't know if that answered the question properly, but I was trying to get my thoughts out.
No, that was beautiful. Thank you.
Yes, sir. Can you show the 5035 area on Bookmap? 5035. Yeah, let's take a look. They're about to sweep out this 5110 right here. This will attack morning low here, which we're set. And there's that sweep down. And there's that small bottom wick off of it. We'll see how hard they're actually going to bottom wick those orders. 5035 down here is pretty light. They still have 5060, but the big level, Paolo, is if you look down at 4960. That's the big cat. That's the big guy on campus right now. It's 4960. Do you wait for the daily move after the first hour, or do you go in one way or the other at close at 10:30? So I usually, once the 10:30 time frame finishes, which has just happened, that's where I'm going to kind of do my analysis on the morning range and see what's going to happen. Are they going to range it out, or are they going to put a new low in, put a new high in? In this case, we're likely to have some sort of range day today, depending on what I'm seeing here. Now, it doesn't mean I'm going to start buying here blindly. It just means from a probability standpoint here, we're using high and low. Now, if you look at the price action, they just rejected. They had a failure attack, another failure attack on that high, and we're glued to this range, which if you know anything about the patterns, what we're seeing here is a descending triangle, not a descending wedge. There's a difference between a descending wedge and descending triangle here. What this tells us is that there's sellers in strength, and you see us popping into support there. There's sellers in strength because the buyers have failed multiple times, and we're getting ready to test this liquidity zone into a lower time frame. And that's why they took off liquidity at 5130, added it more a little bit 5110. They glued more off of here without coming off, and now they just swept 5110 while continuously bottom wicking this 5110 area. But that's what they're doing. They're testing that lower liquidity to see, do we have any remaining buyers left? We have called a low volume test. How many times can they pop us into 5110? And they're going to see, all right, well, there are already buyers remaining. And they keep on bottom wicking. So far, we do have a little bit of light buyers remaining. And that's where I'm watching. If we break the morning low, that's where I'm looking to short down. But right now, we're just not doing that. So there's our first bottom wick. We came down, absorbed all that 5110. Immediately bottom wick from 07 back up to 12. So a little 4 or 5 point bounce. And the closure of the candle here will be in about 3 minutes. And we'll know. If we do multiple time frame, which is something I love to do, let's go look at the 30-minute chart. Let's go to ES real quick. And we'll look at the 30-minute chart. So the 30-minute, you see an obvious supply. So in my mind, there's an obvious supply right about here, because we had, 8:30 in the morning, 8 o'clock, 9:30, 10 o'clock. We've had multiple attempts into this 5120 area with nice rejections every time. And now the buyers had their chance for 4 hours or 2 hours, and now are failing lower. So the 30-minute time frame looks quite bearish at the moment, ready for a reduction back down into probably 50-70 or so over the course of the next couple of sessions. This liquidity here, the fact that they've now shifted off all liquidity and skewed back lower into 5100, makes the 5100 test a little bit more likely. We just had some CL news, so CL is popping back up. CL has been back and forth in a defined range for a number of weeks. It's a very tight price action. Get this back on here. Yeah, crude oil inventories. Stops set using market volume structure, not the prior candle low. Yep. You're welcome. That's every time you make a decision on whether to enter or exit or place a stop, in my opinion, it always has to be derived from the market itself. There's no indicator out there that's going to be able to tell you with real accuracy where to place your emphasis on. It's got to be about where the market structure is. It all boils down to one thing, and that's liquidity. Every bit of it. Now, if you can understand that, you can be way ahead of 80% of traders, 90% of traders, is that the market is simply liquidity. It's an auction. That's all it is. Buyers buying low, sellers selling high, and shaking the tree as hard as they can to get everybody out of their trade. In order for the market to move in an imbalanced function, they've got to be able to sweep one side of the book. And that they do that through the process of sweeps. If you're a retail trader that has a tendency to enter at the most inopportune times, then you're reactive trading into a sweep. You're only beginning to short when you see red, and you're only beginning to long when you see green. And typically that is exactly where you need to be countering the movement and not going with the movement, because that's what they try to do. The market tends to top out when it looks more bullish than ever, and it tends to bottom when it looks more bearish than ever. So they're still absorbing this 5110 here. They removed all upside, and now they're stacking 5100. And they've taken below the morning low here, which makes a 5100 test a little bit more likely. What about breakout trades? This guy works at Wendy's. I love it. Trusted buddy system. Yeah. Thank you, buddy. Appreciate it. Thanks for the comment. What about breakout trades? Breakout trades are retests. So we all know that breakout trades fail 80% of the time. Roughly. That's a number. Stats always are great. So for me, if I'm playing a breakout or breakdown, if I'm not already in the trade, then I need to wait for the retest. Now, sometimes it'll break out and continue to go and leave you behind. That's fine. I don't want to get in the habit of longing a breakout high or shorting a breakout low. I have to wait for the retest of liquidity. So I have to wait for the breakout test of liquidity. So when that happens, when we break through a support, I want to wait for the retest. And the way that looks, so right now, for example, we've got a support. Let's use something a little more accurate like that. Let's do this. When I have a support, like right here, I don't want to be shorting this level unless we have a retest. Now, that little thing could have been considered a retest there, depending on what time frame you're looking at. But let's say I'm tracking the 15-minute chart. We have a 15-minute red candle, and then a hammer green, and then we fail. This is where I'd want to short on down. Now, if you're a 5-minute scalper, this was your retest right here. But the retest down and back up, the liquidity sweep is coming off right here, right on that 5108, which will give us a 5100 test, which is a little bit more likely. But all signs here are still breaching 5110. They removed that upside liquidity, which shows a little bit more propensity for downside. And now they're stacking even more 5100, which, play towards 5100 retest. This is a nice little fall off from the 5120 down to 5110 now that they've finally taken out market structure. Not to mention what we talked about this morning in our stream before I got on, is the market was running a little bit too hot. Too much too fast. And me knowing what the liquidity means is that typically the market rolls over when it looks very bullish. That's exactly what happened. 51.27 now down to 51.04. NASDAQ is giving some back here too. The 5100 pivot is a pretty major pivot on the S&P. SPX has also got 5100 trying to retest. They weren't able to do that here as well. But a nice little downside flow off of this level. Is that a descending wedge on NASDAQ 5-minute? No, I don't see one. I see an ascending channel that just finally broke. I don't see a descending wedge. Volume's coming in. Yep. So you see what they did here. They had all of this. This is what the order book looked like 20 minutes ago. Skewed 51.35, not much on here, but look how it shifted. They took that off. They put on 51.08, 51.09, 51.10. They blew through that and glued. We have another iceberg here coming down to 5100 retest. I took a single dated put with declining buy volume, larger sell side candle with preceding bottom wicks. It's down 49%, but holding to at least break even. A 5 to 6 week freedom to fruition. Didn't expect such a prolonged bullish movement with low volume. The market to me had completely defined signal for downside. Yes, everything was quite bearish, yes. But what happened here, the reason why we had such low volume here is because we had, for the first time in many months, we had a very, very large VIX. The VIX spiked to 21. Premiums were very, very elevated. IV was into the 30s and 40% for a number of days. Now we have to go look forward. What do we have? Last week, going into this week and next week, on the horizon, you had big tech earnings, and the week after that, you had FOMC. The market is not going to spike VIX into the 25 or 30 with it already resting at 21, because then we'll spike to like 38 and 40. So, not to mention, the market makers who are dealers in nature, when we're buying calls, they're selling calls, they're going to use that opportunity of very, very inflated premiums to write premium. They're going to be selling puts like madmen down there at the lows to collect that premium, and when that starts happening, closing out the puts, writing puts, the market enters into a tailwind effect as the VIX rolls off, and that's why we have this big move. So you are right. We didn't have any major institutional buying on this bounce. There wasn't any major, huge buy flows coming in here. It was just simply a grind upwards with the VIX rolling off as premiums begin to be taken. It's all about the position of shorting premium, writing premium from a dealer's perspective. Reset the book going into Meta earnings this week, and then of course FOMC next week, which is supposedly going to be a very volatile event, and I believe FOMCs will continue to be more volatile going into the end of 2023. In fact, I think the FOMCs we'll experience from here on out will be more like the 2022 FOMCs, not the 2023 FOMCs, which are a little bit more neutral. So I think we'll see more of that as we get closer to the rate cut cycle, especially if they elect a hike again. If they do that, then Lord help us all. So still sustained price action here to the sell side. You see increasing sell pressure. And you see here's the test of 5100, which once we took out 5110 was likely right here. Does Bookmap have candlestick views also? Yes, they do. Thank you. Still unable to recognize patterns. Working on it. Yeah, I don't think you need to focus too much on it, Polly. Patterns, yeah, they help you, but not that much. In fact, I think patterns can cause a lot of bias. Not that big a deal. ES coming off 5104 and tapping just at 5100 right here. So here's a 5100 retest. I think they'll sweep it. Understanding liquidity is still a major weakness of mine. There's a couple of books you could read. Obviously, the Anna Coling book is fantastic. Complete Guide to Volume Price Analysis really dumbs it down, which is what I need. I need it written in crayon. And that book does a great job of describing how liquidity works and what liquidity is on a very good basis. I'd encourage you to read it. I'm a very pragmatic person though. I want to know why the market is doing something. The market does not care at all about the line you have drawn on your chart. It doesn't care. It doesn't care about wedges or triangles or lines or anything. The market cares. It'll bounce based on liquidity. So that's why I have to be a VPA trader. I have to be based on how I work. I want to know where the market liquidity is. That's why I use Bookmap, because Bookmap allows me on a visual, nice, easy way. There's liquidity in the market, and I can play off of it. Name of the book was The Complete Guide to Volume Price Analysis by Anna Coling. Complete Guide to Volume Price Analysis. It's a red and blue cover, or I guess pink and blue cover, depending on if you have color blindness or not. And you can find it on Amazon for, I don't know, $20 or so. You can get a Kindle copy for less than that. So for me right here, this shifting of liquidity was huge. They rejected 51.35. They're glued back down into the morning range. Finally swept that level for another 5100 retest. Mine is pink. My colorblind. She has a color version coming out this year. Current version has all black and white pictures. Oh, nice, yeah. I'm confusing since it's red immediately above and below. You talking about this right here? I wouldn't get too caught up with the immediate ups and downs. That's more of the bid-ask fluctuations. I want to know where the overall set liquidities are. You're pretty much always going to have red above and below. That's just going to be the bid and the ask. There's the order flow coming in for the bid and the ask. The high-frequency traders, the scalpers, that's them. I don't care about them. I care about this cat at 5100. I care about this guy. I care about this guy that's coming on at 5,000. This guy at 49.80. This guy at 49.60. So for me, I'm a high level. I'm a zoomed out type of guy in terms of Bookmap. I want to know the macro stuff. I don't care about this stuff. I want to know this stuff. The overarching picture. What's the flow for Friday? There's no way to know. The flow for Friday is what's currently set. Now, in terms of options chain analysis, we could look at the option chain positioning for Friday. But in terms of the Bookmap flow, the order flow, what's set is set. Scalp retail versus market volume wide thesis. Yeah, I mean you could. I mean I'm sure there's some big players out there scalping. Sure, I can't count for all of them. But I try not to think in terms of retail or otherwise. I just try to think about market wide stuff. The further I zoom out, the longer I'm going to stay in a trade. The more I zoom in, the shorter I'm going to stay in a trade. It's simply because of how much time frame am I building into my thesis. If I'm looking at the 5-minute, I can't place a multi-week swing trade on a 5-minute thesis. I've got to be able to zoom out to the daily, monthly, weekly charts to get a thesis on the long-term stuff. Another red candle here. Starting to shift down. Now they're putting liquidity down to 15.95 after a small couple of point bounce off 5100. And as long as the buyers don't close the follow-on green, which they're failing, I'd expect a 5100 absorption here soon. There we go. There's another 5103, another broke down. Get the squigglies off here. Russell's coming on down 2. VIX is holding 16. So it appears they've stopped rolling the VIX back over. They're holding 16. So that's what you want to see for some positioning for next week. Which fits into my thesis that the only thing we saw here was just simply a repositioning of the VIX. Repositioning of a 28 or 27 to 33 days out on the VIX. And I would not be surprised to see a relative range going into FOMC, which is now in a week. We have 5 trading sessions until the next FOMC. Here he comes down to re-sweep out 5100. So confirmation candle failed so far, and it closes in 3 minutes, 2 minutes. Got swept on the 1 minute. Can you explain what's going on with the chart from the left? Yeah, what you're seeing here is Bookmap. That's my Bookmap software, which is the order flow tracker. This is a live order flow tracker to allow me to monitor any kind of liquidity zones, as well as some proprietary indicators like I personally use stops and icebergs, which is my favorite. I think the icebergs is worth its weight in gold. If you are a Bookmap trader, I'd highly encourage you to sign up for that MBO package and grab that iceberg indicator. It's a fantastic resource. But yeah, this is an order book tracker. So if you've normally been used to tracking level 2 data or any kind of order flow, this is a way to track it visually with also a little bit more analysis you can tie in depth for. 5103 down to 5100. Dow's come off, Russell's come off, Microsoft is down. Apple is the only one not drawing down here. Meta even got smoked. But so far we have no buying pressure. It's all selling after rejecting up here into the 5130 and now removing that liquidity and shifting everything downside. So the participation is down to 5100. The liquidity is 5100 right here. They're even stacking 97, they're stacking 95, and they're rolling on down to 90. Here's another retest. With this sell-off, would it be ill-advised to short as you're trying to catch a falling knife? Well, zoom out to the 4-hour chart and tell me. Let's go out to the 4-hour chart here. 4-hour chart, we've got on ES, we've got 49.66 up to 21.30. So almost 200 points of action here. So we've gone in 2 days, 200 points. And now we've got a very, very small red candle. So it really depends. Now, would I be shorting at 5,100? Not really. Not to mention the momentum is kind of slow today. Not all that crazy. So things could pick up into waterfall if we break back under 4,100 and start retracing back down to 50.80, 50.90, sure. But it's all about what time frame you're trading on. If you're a short-term scalper and you're not already in, I wouldn't necessarily recommend shorting at 5,100 because that's a psychological 0-0 level and we'll have a little support there. And of course, I don't know how strong the sell-off is going to be. All I can really track is what's happening currently on the order flow. Now, the SPX as well. The SPX GEX is down to 50.30, which is an option chain positioning. We have liquidity shifting down to 5,100 with an aggressive skew down to 49.60. So we definitely have some appetite for lower. I just don't know when they're going to fill that. Do I trade in BTC? I do not. I've bought one Bitcoin before in my life, and I sold it with a little bit of profit 3 years ago. But I don't track it myself. Here it comes down to 5,100 sweep, 51.0175. And that's a new low of the day, I believe, for ES by a tick. We'll be taking out 5,100. There we go. All sounds point to downside here. We have the 30-minute, which is aggressively bearish at the moment. We have the 15 minutes coming down, and then the 5 minute is put into the low end with a skew down lower. And the CVD, notice the CVD has gone from plus 5,000 to negative 3,400. And that's why that subchart indicator, the subchart is very, very helpful. Because we initiated the downside with still a 4,000+ green CVD, which could throw you off. You got to track the aggregate. Is every time we fill orders, it dumps down, and now we're tracking nearly 3,500 negative. Am I subscribed to TradingView live data as well? Yes, I am. $5 a month. Well, $10 total. $5 for the S&P and $5 for the NASDAQ CME. But yeah. My trading window is about to close. I'll see you in Discord tomorrow. Nice, Elaine. Great job. See you tomorrow. There's a 5,100 test right there. That's the first time we've touched 5,100. And they're holding it. Let's go to NASDAQ. NASDAQ is trying to retest their pre-market pivot, which is about 17,667. Let's see what they're doing on liquidity. Very light book down to 600. I got the $200 yearly deal trading view offers. Nice. Yeah, I did too. I didn't do that for the data though. I did it for the actual subscription, but I didn't do that for the data. XLF is down. We got 17,690 on NASDAQ. Still holding at a 5100 test on ES. Can you tell if liquidity at 49.60 is a stop? No. No. Open just resting liquidity. But it's a big player. Where's players? CVD is down 56,560. And just kind of still hanging out here. There's no icebergs. We had a 400 set about 20 minutes ago. But we are coming up on our time. Our time together. CL did the pop and drop. Yeah. CL does not like this 83 range. It's been here for a hot minute. It looks like they're giving some back.
We got a question here from over in YouTube. How often do you hedge your scalp plays compared to just closing out?
I don't hedge scalp plays very often. I mean, scalps in nature, like if I'm in a trade that's I anticipate to grab 10 points or so, if it doesn't go right, I'll just cut it. Long-term plays I hedge nearly 100% of the time. Nearly. But scalps not so often. Now, it really, I guess, depends on what you define as a scalp. If I want to put on a trade that I hold for one entire session, like if, say, I open market open and I close at the end of the day, maybe I'll hedge, but most of the time I'm just going to go ahead and close that baby out. Because the thing with short-term positioning, you can always just re-enter. You know, if I take a put and we have a temporary bounce, I could just close it out and always enter a new put. Ain't no big deal. Yeah, and of course it also depends what I'm trading. If I'm scalping futures, I may hold on a future a little bit and scalp a call. Like if I want to short futures, I may scalp a call every now and then. But if I'm doing options like 0DT or 1DT options, you don't really have very much time. By the time you realize that you need a hedge, the position's already so far degraded that you should already been out. But good question.
How do you typically hedge the longer term?
It depends, honestly. For example, this past trade I took, I did some calendar spreads to lock in premium, which is my favorite way to do it. On April 5th I took a SPX 5000 put, which was a very great entry. And on the way down, even though I expected more downside, I began to write puts against it just to lock in premium, which is another way to just close it out. You know, we all know that options have theta involved with it, and the slower you make a move towards your anticipated strike, the more theta is going to be involved. And instead of just losing that theta out into the ether, I short premium against it, shorter time frame premium, so I can collect the premium I'm losing, basically lock in profit on the way down. That's my favorite way to go about it. Now, a couple of weeks before that, I had a put on, and we had a very, very aggressive bounce in 2 days, so I put on a long call. I bought calls and made a lot of money on the calls and left on the long-term puts. So I bought, I think it was a 1 DTE call against a 5-week put, and I made an insane amount of money on the call while losing the money on the put. So it really depends on the current scenario, how aggressive I want to be. If I think I'm going to have a temporary price action against my position, I'll go shorter dated. And if I think I just want a sustained, I'll write premium against it to collect. New low of the day across the board. We finally took out 5,100 and wiped out the liquidity there on ES.
I'm sorry, just to continue on with that. How aggressive do you get with the hedges?
Pretty aggressive. It depends on my thesis in general, and and how quick I actually get into profitability. You know, the position I took on April 5th was a position that was approximately 200 points out of the money, give or take, and we got there very, very quickly. And we had a lot of red action in the following week. And the deeper we went into profitability, the more aggressive I became on shorting premium because I wanted to lock in that profit. And so I didn't write any premium at first because things were starting to work out well. But the deeper I got, the more I put on short puts to lock in that premium. And I became more aggressive with that the deeper we got into profitability. Now, conversely, a couple of weeks before that, I had a long put on that briefly went into profitability, and then I quickly realized that the position was not going to work. So I put on a very aggressive position, which was a 1 DTE call, and I did that very quickly. So it really depends on the price action I'm seeing and what strategy I actually want to utilize.
Okay, great, good stuff.
Yes, sir. My current position now, honestly, is to begin. I'm currently flat on swing trades, but I want to start building into another downside PDS on here to take a little bit of risk to downside exposure, but not so aggressive as before because the risk reward is now diminished. We don't have the same risk reward we did when ES was at 5,300 or 5,250. It's now down to 5,100, so the risk reward is not there. So I do want to begin to build another downside position, which I'll go ahead and enter a PDS or even a PCS. And just ratio in and out to flip my if I'm short delta or long delta in order to change my exposure. What does it mean when you say liquidity got wiped? What does that mean when whales? Does that mean whales took profit like their puts? Yeah, all it means is that the open orders that are resting at a particular area has been transacted. Like right now, 5,100, it's no longer there. It's assumed that they have now transacted all the liquidity that's sitting at 5,100. Now, if we do not bounce here at this 5,100 area, then what I'll be looking for is continued skew lower, 50.95, 50.90, and etc. Right now, multiple time frame analysis has us down. We broke below the morning low, so we're now in a defined trend down day. We held under the 5110. We finally took out 5,100, and they're still skewing the book down to 50.90. The first big move for me was the fact that they took out the 5135 at approximately 10:30 Eastern. So about 40 minutes ago, they took out that 5135 and began to shift lower. It's all about that skew of the book.
Just going into the theme here of the webinar series this week over here at Bookmap is trade management. So you have a very unique way with the hedging and you know the hedging of the options for a bit longer longer term positions though.
Hmm. Hmm. Yeah, yeah. What was your question? I missed that part.
No, no, no. It's just I guess an acknowledgement.
Oh
Yes,
yeah, yeah,
that
yeah.
that is the case.
Yes, sir.
Yeah.
Yes, sir. Yep, yep. I'm a big believer, just like any kind of tradesman, like a plumber or an electrician, they've got a toolbox with a whole bunch of different tools. I think it could benefit you very well as a trader to have multiple different ways on which to trade and hedge. And I'm a big believer of knowing when to write premium, when to scalp, when to swing trade, when to trade stocks, when to trade futures, because the market is constantly cycling. Or right now, the way I put it is we're making hay while the sun's shining. Right now, this market is putting on substantial volatility for the past 4 years. But I know going, trading, trying to trade 2017 and 18, that's not always the case. Back in the day, we were trading 5 point ranges on ES, which you cannot scalp. You just can't do it. So you had to be able to be nimble and learn how to do different ways of trading and hedging. And I know that will return again. Once we get through the rate cut cycle and we sell off and have a bounce, that will return and we'll have to adjust again. There will be no more scalpers in the market. So, and I'm a big believer of knowing when to do all that. When do I take a call? When do I write a put? When do I put on a PCS versus a PDS in order to hedge a particular position? All right, a little bit more selling here. So we finally broke below 5,100 there. CVD continues to plummet down. You see the aggregate has fallen over from plus 5,000 to now minus 5,500. And the aggregate is very much down. You see the pressure here. The 30-minute and the 15-minute points to all down. And we really haven't had a buy trigger signal all day. The first momentum play failed at 51.21, and since then, the sellers have been in complete control this entire morning. Even the Bookmap was shifting liquidity from 51.35 down to 5,100, and we have multiple time frame analysis pointing towards down. Once we held at the morning low at 51.10, the probability of achieving 5,100 increased, and down we go. But so far, we have not had a buy trigger yet. Andrew's a god of volume. I wouldn't say that, but I do like volume. Is this a 15-minute breakout? It is, yeah. I'll break down, yeah, yeah. Learned a lot from him. No Diddy. Appreciate it. Too much, too fast. Much too fast. Much too much, too fast. Market can't run that hot for very long before a decent pullback, and that's what we're seeing here. VIX is now rebouncing back up into 16. It's now up 3%. If you go back and look on the VIX and zoom out, I'm very cautious to use the word support and resistance for VIX because the VIX is not traded. However, the calculation on the VIX tends to mean revert. And right now, that's exactly what we're seeing. Mean reversion back to 15, 16, and reallocating the book going into FOMC. The market will not run hot volatility for multiple weeks going into an anticipated volatile event like FOMC. So what's the natural anticipation? The VIX rolls off, market has a tailwind, reset the VIX, mean revert, or draw down the premiums to sell, because that's all it comes down to, and then reallocate for FOMC. It's beautiful stuff. $17,661. When's FOMC? It's May 1st. Wednesday, May 1st. Wednesday. How will we trade prop firms without scalping when the volume dries up? You won't. A lot of people are going to get smoked, unfortunately, because the people that only know how to scalp, even if they do find some sort of success with that, are not going to be able to be successful when the music stops. I've been there, done that. In 2017, 2018, there were hedge funds shutting down simply because there was no money to be made. The only people making money were the people that were buying indexes and holding for multi-months because you cannot scalp a 5-point range. The premium VIX was down into 8. Premiums at the money were nothing. You couldn't write premium. because there was nothing to be had. Really, the only play were shorting contango with the VIX futures, and long-term plays. So you'll have to adjust or perish. What are the odds that ES will touch the fair value gap at 1 hour? I'm not tracking the fair value. What's it doing right now? I know what you're talking about, though. Wait, approximately 50-80? I'd say a 50-80 retest next couple days is probably pretty likely. Pretty likely. Do you think we'll tech 49.60 before FOMC? Do I think we'll attack 49.60 before FOMC? I will say this. I do expect 49.60 to be transacted. Whether or not it happens before FOMC, I don't know. I would be surprised to see 49.60 be transacted before FOMC. But I do think it will be transacted. I think most likely we'll have plus or minus a 50 to 70 point range from here until Wednesday. That's my thesis, because I don't expect them to move it too far going to that event. My overall thesis is that we are bouncing back up to refresh for another leg down. That's my overall thesis. How many months or years did you master the volume? This is my 13th year trading. I haven't completed 13 years yet, but this is my 13th year. And it's taken me every bit of it to master, I wouldn't even say master, to be able to get something going here. And honestly, I haven't mastered anything. It's not what I've found. It's not about being right or wrong. It's about how do you manage your system. How do you manage yourself in the system? That's the key there. What makes me successful is not necessarily being able to, be quote unquote right. It's about how do I manage when I'm wrong. How do I put on a hedge appropriately? How do I know when to set a stop loss? How do I not be stubborn and close out a losing trade? That type of stuff. It's more in a management of myself than I am a management of a system. That's right, Dan. Yeah, I'm still at your Bernie. Could you discuss fluctuating volume and a continued trend? I start to get spooked when volume falls off, but in today's downward move, that would have cost me money. Well, I look for increase in volume around a pivoting trend. Typically, you don't get spikes in volume during the trend, unless we're reaching a point of support or resistance. It's typical for the market to have a volume spike to initiate trend, volume falls off during the trend, and we start to have a spike in volume when we're reaching a pivotal moment, typically. So it's a balance between monitoring the influx of outflow or volume and where it's occurring at. Does it make sense where we're bouncing? Like, did the market sell off and hit a multi-month support in bottom wick with volume? Then most likely you are seeing a reason for high volume because we're transacting into demand. And you have to think, where do high volume spikes come from? High volume spikes come from normally because there's participation by both buyers and sellers. So the selling candle you see at the bottom of your charts is representative of high participation between buyers and sellers together, so you get a collective high volume spike. Now, yeah, you will get occasionally where it's all sellers and all buyers. Usually it's centered around a catalyst like data or a major some sort of event that causes volume influx. But it depends. But to me, it's about where volume happens, how much volume has happened, and where it happens, which is why I use the volume profile in conjunction with my volume candles, because it allows me to figure out how much volume we're dealing with and where at what price does the volume actually transact. So, new low of the day for ES, transacting down the book askew lower. We still have no buy signal. We still have multi-frame analysis here down into the 50-90. Looking at the multiple time frame analysis on the 30-minute, we have engulfing red on the 30, 15, and now the 5 with the new low. So in going with your question of volume analysis, if you are looking to go long, go into your charts figure out at what point is it probable we could bounce, and then look for a volume spike at those areas. And don't do it on the 5, do it on the 15 or 30 at least. Do we get a bottom wick there that closes bottom wick and the follow-on holds? And do we have an increase of volume? If the answer to those questions are yes, then it might be time to start longing. Until then, I would either hold short and play towards 50.90 or not long at all. Not until you get the confirmed bounce. Right now, the book is still skewed to 50.90. I don't see any management above. We still have 51.35, which was cut in half. That was over 600. And we're adding liquidity down to 50.90. So that's what I'm doing. Is you either hold short or you don't long at all. I just noticed you have a new assistant admin today. No, that's Bruce from Bookmap. We're doing a Bookmap webinar stream today, so he's the co-host. Calling a bounce on the upward fair value gap of 504.05. Let's see where that lands on SPY. 504.05 would put us about there. Interesting. We'll see. That is where the buyers held. So that was that 504. In fact, I've got a support drawn at 504.03, which is the prior resistance or the support test by buyers yesterday, because we had a big green flow. The first red candle put in support at 504.03. So we can expect some sort of pivot there. Do I think it'll be the low of the day? So far, it doesn't look like it, but I can expect some support there. Thanks, Strategic. Still pushing lower here. Flow is still on down to 50.90. So for me, I would set my short above 5100, my stop loss, I should say, or profit, stop profit, trailing stop, because I know 5100 is natural defense of the market. So if I want to stop out of this trade, I want to set my stops beyond 5100 to allow the market to retest and reject 5100. Meta earnings after the bill today. Here's S2. Let's take a look at the GEX. Market net flow is substantially bearish today, which should be pretty self-evident at this point. GEX has rolled down to 5045 from where we normally had it at 5100. Can you talk about stop losses and options? Futures make sense, but there's some guesswork on options. Yeah, that's right. With short-dated options, it's very difficult to set an accurate stop. Now, you could do a little wag using something like Options Strat or any other kind of options analytical tool, but most of the time you're just going to have to set an estimate of what the price set will be given any kind of certain bounce. So there's not really much you can do about that. One of the benefit of futures. There's another push down here into 50.90, still no buy signal. And we're just continuing to ride your shorts down and set your stops accordingly. For me, riding the positions down, you set your trailing stop on downwards. You let it continue to roll the price and see what happens. With the liquidity down to 50.90. And we do have icebergs coming on. You see the CVD continuing to roll more red. The CVD has gone from +5, now down -8 at the 13,000 delta. Continuing to push more negative, which means the sellers are still rolling the tape. Obviously, looking at the price action, that's pretty evident. We have no buy signal across 30, 15, or 5. It's simply rolling down into support, of which we have not found yet. Do you just not use the chart to set stops for options? Yeah, but they were asking, how do you determine at what price you're going to set your stop loss for options? 733 buy. That appears to be a sweep of some sort on that candle. We just had a large lot order of 733 on ES. Does that make sense, Trust Buddy system?
Got a question from Stan. Do you trade SPY options based on bookmap analysis? Can you talk about trade management in an example?
I trade SPX options off of my analysis on ES. So I don't actually track SPY on Bookmap. It tends to be a very liquidity laden. I track ES, which tends to kind of fish out the big players. So I do SPX options off of ES analysis, and when I'm trading options on SPX, like kind of what the last guy asked, it's very difficult to determine actually exactly stops. But for me, depending on the time frame, if I'm scalping, I'll set a trade on based on thesis. And when the thesis fails, I get out. I'll be honest with you, it's very rare for me to set a hard stop loss that's an executed stop loss in my broker on an option, simply because it's difficult to do it. And what I will do is hold the trade until I see a breakdown of thesis, and then I'll execute I'll get out of the trade once it no longer fits my why I got in. So first of all, you have to have a why of why you got in, so you can know when that breaks down. If you're entering simply because, oh, there's some red, I'm going to take a put, then you have no idea on which to exit the trade. So I need to know why I'm getting in the trade, so when it fails, I can get out. Now I trust myself doing that. With longer term options, I do set a hard stop. Simply because I'm not caring about every one little single candle. But in terms of your other question, yes, I do use Bookmap ES liquidity to track SPX options movement. We all know that SPX is not traded, it's an index. So I have to use something to track the S&P movement, which I use ES. So there's a 5092. It's about to come off here, and we're going to attack this 5090 liquidity. Now, what am I seeing that's different than what we saw earlier? I do not see any liquidity being managed below 5090 like we saw here. We saw continued managed liquidity lower the lower we got. Now I'm seeing 5090, but so far, not really much being added here. So could we be nearing the bottom for a temporary bottom here? Possibly. But so far, no real managed liquidity. All I know is that the CVD is continuing to push 8,000 negative, and we're rolling into this 5090 liquidity with nothing other coming down that's of substantial size. So I want to watch this level in the upcoming minutes. With all of you have taught and said this morning, would you have been or be or in this trade, does the past hour meet your parameters? Absolutely. Yeah, the past hour checks all the boxes for a VPA sell signal here. Now that's two decent little buy-ups here. Now it's only 3 or 4 points on ES, so it's still very small. But two little defenses here, 5090, as we're rolling over. And they're not putting on any more liquidity. We've had a couple of buy-side ice, and we've had approximately 800 large lot buy order coming across on ES. So this could be time for a temporary bottom here. So if you are short, set your stops. And if you're long, be on the lookout for a potential buy signal. So far, no buy signal yet. I'm just saying conditions have shifted a touch where it's not quite as bearish as it was an hour ago. NVIDIA has given back a nearly 3% green day. They've gone from 846. They are now down to 816. Let's see what Tesla is doing. Let's see if the short's covered. Yeah, they're up into 167 to 161, still holding. I'm still not bullish long term on Tesla. So I just had the best day I've ever had. Along the beginning of the morning, gave some back after flipping short. Obviously can't give dollar figures, but let's say it's 3x my daily goal. Nice math. Well done, buddy. Don't give it back. Shut it down, baby. In our community, we discuss something called the power of quitting, the POQ, which is you set the parameters on which you're going to shut down your brokerage no matter what happens. It's a great thing to do. Nice math. Good. Shut it down. So there's a decent red green candle. We'll see if it will hold. If we do have a hold on the 5 minute, that'll be the first buy signal on the 5 minute. And we'll see if we can get the confirmation follow on. But like I said, conditions merit a short-term bounce here given the fact that we have no MATA's liquidity lower. CVD is not reducing any further. And we're coming into a support. We're also coming into the European close in 2 minutes. Reversal time of day from when I learned to trade. $50.97. Little 6-point bounce back up right there. Right off of S2. Perfectly calculated. 504.05. 504.03. XLF VIX is holding 16 with a little drop. CL is fluctuating back and forth. It is big time. Still holding that 83 range, just pivoting. We got some PCE on Friday, which should be a big mover for the Treasury market. I'd be watching bonds and the Treasury yields closely with Friday's data. How will the market interpret the next cut? Will they hike again in May and then cut in June? What will they do? Will mortgage rates top 9%?
So Stan was asking if you get into any verticals to manage the risk on the SPX or just a single leg.
I do, yeah, absolutely. Not on any kind of short-term stuff, not on any kind of scalps, but all on long-term I do, yes. And like for example, the next trade I am planning to enter to a ratio PCS and then build a position into a PDS and then ultimately cut all shorts into a long put only in the upcoming weeks. So that's my next plan, which in my opinion is a fantastic way. And I think the basic trader should get into more PDSs more than anything because it buys you a lot of time, especially if you're learning to write premium. But absolutely, especially for position defense, I'll either do a vertical or some sort of calendar, and then I'll ratio in and out as needed to collect or reduce or add hedging capabilities as needed. So, hedging in and of itself is an art form. Hedging can make or break your trade. If you hedge too late, it won't do anything, or you could run the risk of losing more on a reversal. You can lose more on the hedge than you stand to make on the original trade. If you hedge too early, then you stand to lose a lot more money than you stand to make anyway. So it's all a balance on when to hedge and what to hedge. That's why you have to be very selective. So hedging with short premium is a better way to go because you put time on your side. That's what I tend to do. So verticals, whether it be a vertical or a calendar or a PCS or a PDS or a CCS, CDS, is a better way to go. And then if I really need to be aggressive, I'll start longing either futures. If I need to kick up even more, I'll go with short-dated options to hedge if I'm expecting a counter movement that's very aggressive. And I've been known to do both. Back, in fact, in March, and this is a story I've told before, back in March, the market had grown, had climbed, March of 2023, last year. The market had climbed very aggressively in a very short amount of time, and premiums were quite elevated. And on a Wednesday, I looked on Friday expiration, and I saw that even 200 points out of the money, 2 days away, you could still collect like $4 in credit for a CCS. So I was like, heck yeah, I could get $4 in credit for a 2-day CCS, and I took it. Well, the market rallied 250 points in the next 48 hours. And I had to hedge my butt off, longing ES, taking calls, and I still ended up losing a considerable amount of money because the market was so aggressive. So it really depends on how aggressive you need to be, what vehicle I want to choose, and what the market's actually doing, and what my thesis is. Well, it's a good question. So the big takeaway here from the Bookmap perspective is what the managed liquidity has told me. Simply, given everything else, the VPA, everything we've talked about in terms of how to nail this downside, the managed liquidity itself told me what the market wants to do. The market seeks out liquidity. So over here, when I see them take off the 5135 and add the 5100, we began to roll because if the skew's down, there's no appetite for above. Now that we're down here, they added liquidity down, 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 down. Once we got to 5090, they did not add anything more, in which we talked about this is likely a temporary bottom. And now we have a 10-point bounce. And in fact, they've even taken off 5080 now. So the managed liquidity on the book, knowing that the market seeks out liquidity, you can just use that right there to tell you where the market tends to move. If you see no more liquidity being added, if you see liquidity being taken off, if you see the order book becoming very light, the market's not going to play to it. It's going to play towards liquidity. The market seeks out liquidity. What would have been the trade vehicle for today's short-term example? Most likely out of been, futures or short-dated puts. If you're a premium rider, you would want to take in a PDS or a CCS. Yeah, definitely. A short-dated CCS would have paid a lot very quickly today. You could have probably netted 70% on a short-dated CCS very quickly on today's move. Great stuff. So what do we see differently here as well? We have a lot of buy-side icebergs. In addition to what we talked about here, the CVD tapered off at 8,000 and bounced. We didn't drop more than 8,000. We have a couple of buy-side icebergs which we did not see earlier, not to mention the lack of managed liquidity. And now we get a temporary bottom. You got 70% on a 5100 CCS, not 10 wide. Nice. Very cool.
Maybe can you define those some of those terms, PDS, CCS?
Yeah, definitely. So a CCS is a call credit spread, and a PCS is a put credit spread. Credit spreads are a position where you don't, like a call credit spread is a bearish position. You're selling calls, meaning you do not want the position to go up. You don't want the underlying to go up. So, for example, if ES was at 50, or let's say SPX right now is 5064. I do not think, let's just say theoretically, I don't think SPX will drop below 5050 today. So I will write a 50-50, let's say a 10 wide, a 50-50, 50-40 put credit spread with the short leg of 50-50. That is a bullish spread. That tells me that I do not think the market will drop below 50-50, and I'll collect that premium and hopefully expire worthless. A put debit spread is a bearish position. All you're doing with a put debit spread is you're longing a put, but you're also shorting a smaller put or a further outside the money put to collect a little premium on the way down. It's still a bearish position. So the way I think about it is that a debit spread is the same bullishness or bearishness as the original position. So a put debit is bearish, a call debit is bullish, and then a credit is opposite. So a put credit spread is bearish, is bullish, and a call credit spread is bearish. It's opposite of the underlying position. It's just a way to write premium. It all comes down to when you're selling premium, when you're writing premium, collecting a credit, how much of a credit you're getting and what your directional bias is in the market. Naked puts and calls are too rich. Yeah, yeah. There are very, very few people that need to be writing naked calls or puts. It requires a substantial amount of capital because they're uncovered positions. That's why you do a credit spread or a debit spread, because you need to offset the short premium with a long position to lower your capital requirement. If you're writing naked puts or calls, you're taking on the full notional, which is hundreds of thousands of dollars per position. So unless you've got a seven-figure account, most likely you're not going to be writing naked calls or puts. You're welcome, data guy. Thanks, Callie. 5100. Let's see here. Now, what happens the rest of the day? I don't know. I do know right now that the GEX is pinned down to 50.45, which is 20 points lower. We've got Bookmap still having 50.90 liquidity on there. We definitely have a temporary bounce off the 50.90. So for me, I need to see, again, where are they putting on active liquidity? Now, we are getting into the afternoon session. Not yet, but my drop dead time is 11 o'clock Central, 12 o'clock Eastern. That's when I shut down. No more trades after that time frame, at least on my real account. Occasionally, I'll put on some prop firm trades after 12, but my actual real account, I shut down trading after that time frame. And that's simply because the market gets a little bit more unpredictable after that time frame. Even when they do trend, it's a little bit more wicky. Volume leaves the tape, and then it comes back and during, right at or before power hour. The market makers, the big hedge funds, the institutions tend to hedge their positions, remove, take on the first hour and last hour of the day. So that's where I want to center my trades around, the activity in the market. The middle of the day is low confidence trading. In fact, if you're not in the Discord server, my members know that I had a very green March that turned into a red March simply because of trading in the afternoons. I gave back all my profits in the afternoon. So the afternoon trading is not the best. It's all in the morning or maybe power hour for small positions, but that's it. Nothing in the middle afternoon of the day. All right. Let's see here.
During the middle of the day, do you do any spreads you just said you don't trade, but any like try to capture some time value?
I don't do that anymore. Last year, I was writing a lot of 0 DTE spreads to capture any kind of directional, like if we were to drop, write a call credit spread, that type of thing. But it found I was using so much energy and time to hedge the trade when it was wrong that it was no longer profitable for me, not in the long term. I still write premium, although I've been on a bit of hiatus. Until last week I wrote a bunch of premium, simply because the market chopped sideways for a number of months. But yeah, I do. I don't do zeros anymore, but I do like to do weekly call credit spreads, and even beyond that, enter into calendars and PDSs and CDSs and such. But me personally, now there's people that in my community that do write premium every day, and it works very well for them. But for me, it's kind of like I have so much going on in terms of my system that I have to pick and choose what I focus my time on, energy on, and 0 DTE spreads weren't conducive for profitability for me. So I elected to take them out.
Yeah, makes sense.
All right, let's take a look here. So now we're looking, I'm going to go back to my multiple time frame analysis here. We have the first 30-minute green candle that we've gotten since 9 o'clock in the morning, 30 minutes before the open. We already have a weakening momentum by the buyers. And what I'm going to look for here is there anything down here? Let's see if I can find the drawing. The ellipse is fine. Is there anything down in here that is going to allow me to exploit the order book? Are they going to add any kind of liquidity down here? Otherwise, we may be set up for another 50-90 test. We've already had a weak bounce here that's already failing because just like we had no down here, we have no liquidity added back up. They didn't add to 51.35. They didn't add anything right here. They didn't add any big smoke show levels. Just this. So all this appears to be right now is a 5100 retest, which is a prior support, now resistance. If that fails, I'll look for a 5090 retest, and I'll look for more managed liquidity lower. I'll also track the CVD. Do they re-deflate that back down to 8,000? If not, if we have falling prices under a CVD that's not decreasing, then I want to be careful for speculating on more downside. But so far, multiple time frame, we have continued momentum down here. It's actually a rather large engulfing red so far forming. That's 6-7 points on ES for a retack on 5090. I'm drinking water. Sorry about that. I don't mean to slurp on the on the microphone. I'm doing 75 hard, man. I gotta get my gallon of water in. All right, 5094 here. Retest to 5090. You see them adding a little bit back down to 5080. So very light, but they're adding it. You see it? Just a little. And we'll see if that becomes more robust. Nice move here. YM is down. Russell's down. Microsoft is down. NVIDIA, all's putting in new lows. They're adding right there 5087. That's a new low of the day for ES quickly. Very large move on the S&P. Real support does not start coming in for a while. Not to mention the GEX is 5045 on SPX. A little bit of options pull a little bit lower. Still holding here. CVD quickly popped over 8,000, so I'd anticipate new lower prices here. A lot of selling pressure hitting the tape. 1590 and breaching that. Nice little red engulfing. Almost a 9,000 CVD. That was a strong push down on ES. NASDAQ is coming off hard. $88. There we go. Still blasting down. Beautiful. Beautiful. Order book is adding 5080. CVD is still building it to 10,000. You see that big sell aggregate? The VPA failed bounce for new lower prices. My personal goal is to supplement my monthly income and aid my family, not necessarily become OM2. My goal is $500 a week. Oh, thanks, Richard. Yeah, $500 a week is definitely doable. You know, with a lot of work and effort, and of course, depending on your account size, you can do it. $50.88. Still watching liquidity here. $50.80. They're adding here, adding down, so they're a little bit more robust here. 9100 CVD. NASDAQ is doing the same, down to 17,587. $50.87 to $50.85 still no buy signal, still sell short here. We have the small temporary bounce at 50.90 that quickly failed. But remember, what did I say earlier about approximately 10:45. I said if you are short, place your stops beyond the 5100 level because they are going to retest 5100, and you don't want to get caught up in the sweep. Where do we reject? 5100. So if you were to place your stops beyond 5100, you'd be just fine. Place your stops beyond the liquidity. Have a method to your stops. Don't just place them simply because it's the dollar amount that you don't want to lose. You place your stops beyond the structure of the market, which in this case was 5100. We set us up for a 5100 retest, reject, and now we're putting in a new low. And congratulations, that was like an extra 13 points. I'm an old Marine. Yeah, buddy. I'm Air Force, so I feel you. I feel you.
Another question I had for you. So regarding like FOMC next week, and how would you? I mean, would you look at trying to or earnings, for example, and expectations in earnings, like the week or two before, to get in some credit spreads and just because you're not looking for a lot of volatility.
Mm-hmm.
A lot of back and forth. Is that something that you typically do, or do you or one of the strategies that you employ every now and then?
It's about right. You said writing premium for FOMC.
Yeah, before.
If I'm going to write premium, it's going to be after FOMC. In my opinion, in my experience, is that going up into FOMC, especially in the post-Corona environment, because things are crazy. In the post-Corona environment, when we get into the FOMC events, the inflation or the not inflation, the IV typically pumps, and it makes it very difficult for premiums to come off. Even with theta, the IV holds up the premiums very well. So I typically don't like to write any prime premium until after the event has posted to kind of get that deflation of the IV crush. That's when you take advantage of the writing premium, me personally. Not to mention, I don't necessarily like writing premium during the day because the FOMC events is usually so volatile that it's very easy to breach a short leg or not. Not to mention, also I think that the FOMCs will begin to ramp up in volatility, kind of like what it was in 2022, going into the summer and election months of the fall election months. So I don't want to be kind of testing the waters there with that stuff, with that thesis.
Yeah, interesting. So everything's kind of flipped around in this environment.
Yes, yeah. So, and it's knowing what kind of like the way I always try to think about my positions in a big boy standpoint, like the big market makers institutions. What are they doing? Because I know every time that we are buying a call, they're selling a call, and every time we buy a put, they're selling a put. So the market moves, especially in this new environment where zero DTEs every day, which is new to us in the past 12 months. What are they electing to do with their positions? If you see the market as heavy puts, they are heavy short puts. At which some point they are going to deflate that premium to kill those puts so they can collect. They want those to expire worthless until they make the next move back down. Plus, the way I apply the VIX is that when VIX spikes and they begin to roll off, you never want to short a market where the VIX is rolling off aggressively because that's a tailwind effect for the market as they begin to close out those downside hedges, which normally is translated to closing out of puts. So with that thinking in mind, when I see an IV structured environment such as FOMC, CPI, PCE, something along those lines, I don't want to write premium into those events because the premiums are going to increase with the IV pump. I want to write premium after to take advantage of the crush or just before the premiums crush. So I can, one, take advantage of that premium deflation and collect, or two, have some sort of defense where if I do get directionally challenged on my short leg, the IV will offer some sort of protection on the deflation even though that I'm getting delta pumped on my positions.
Yeah, yeah, makes sense. So, but do you do
Cut out there for a second.
do you do straddles or strangles during those times and kind of go like and zero out the position, the delta?
You talking about long premiums? I don't do any short strangles. Iron condors would be the closest thing, but long strangles, I used to do it. 2022 was a fantastic environment for long straddles. It was ridiculously easy to make a very large amount of money just putting on a long strangle before a CPI event or something along those lines. But the volatility rolled off, the ranges of these events stopped, and long straddles started getting killed. And that happened to me. That happened to me in December of 2020. What was it? 2022. I put on a very large long strangle at FOMC, and it got killed because the market. If you remember, December FOMC was dead flat, didn't move at all, and it killed the long strangle. So ever since then, I stopped doing them just because I thought the volatility left. Now I may pick that back up again going into the later half of 2024 with the increase of volatility expected for FOMC. However, I think I'll take those positions a little bit earlier, so then I can take advantage of the increased IV in addition to the increased range of price action.
Yeah, yeah, makes sense. Yeah, great stuff.
Yes, sir. Yes, sir. But to me, this is I'm very, very passionate about trading, and for me, trading is more than what's really kind of being perpetuated on streams of scalping. I think trading is an art form, and if you want to be a master of trading, or even someone who's moderately successful at trading, I think you have to kind of get into all the nuances. It's more than scalping. It's more than sitting here watching every fluctuation of the candle. It's learning market process, risk management, trade management. It's learning about what's going on behind the curtain. If I was to pull back the screen and see the hamster wheel, what's going on? And that has kind of led me down a path of learning, writing premium, futures, options, stocks. How do I trade it all? How do I employ any particular strategy or tool or vehicle to get me profitable in a certain market condition? And I love it. It's an art form.
Yeah, yeah. Some really great stuff. Really appreciate it. Thank you.
Yes, sir. Absolutely. I appreciate being here. Definitely. All right, 5090 ES still holding that prior support. So you see so far we're holding that 5090 liquidity. No more matters liquidity so far other than the 5080, but we're not bouncing either. So far, sellers are still in control. Sellers are still in control. Multiple time frame analysis still has downside position. But normally, this is where I will finish off my morning, simply because this is when price action starts getting a little tight, and my drop dead date, or my drop dead time right here, is at 11 o'clock Central, 12 o'clock Eastern when I shut it down. So no more trades for me unless the afternoon kicks off right before power hour, and that'll be it for me. But I definitely appreciate Bruce and the Bookmap community having me on, as I'm continually love being a part of the community.
Yeah, thank you so much, Andrew. I mean, this is just they're always so good, and it's also such a different way. Like a lot of people are looking at very low time frames within Bookmap, and like you said, scalping. And you are zoomed out looking at these much higher time frames, but using the liquidity in an extremely effective way for your trade management, which is completely different using the options. So a very unique kind of viewpoint and use of liquidity here, which is fantastic to see.
Yes, sir. Thank you. I appreciate that. I like applying. The Bookmap tool has made me very aware to market conditions, which I really enjoy. So I appreciate the comments. It means a lot to me.
Yeah, we'll have to do another one soon, and get you. I don't know, like maybe we can find a new kind of slant or something to cover. Maybe open the questions for everybody. Kind of ask me anything type of thing. I don't know. There's just so many good things here to cover and go through. It would be really good to maybe open it up. I don't know. Just a thought.
Yes, sir. I'd love it. Anything you got, I'd love to be a part of it. It's a fantastic place, and I'm always up for spreading some education.
Yeah, yeah. Well, yeah. Thank you so much, Andrew.
Yes, sir. Thanks, Bruce. I appreciate you having me.
Okay. All right.
Have a good morning.
Okay.
Bye bye.
Take care. Bye.